Welcome to today's market report. European stock markets traded higher Monday as optimism grows about an economic recovery as vaccination campaigns continue to make progress. The DAX in Germany traded 0.1% higher, CAC 40 rose 0.4%, FTSE 100 climbed 0.3%. Europe has been hit hard by the second wave of the COVID-19 pandemic, with the region's GDP falling by 0.7% in the final quarter of 2020 due to lockdowns and other measures. However, most of Europe and most of the developed world is now reporting a falling infection rate while they ramp up their vaccination programs, prompting hopes that a degree of normalcy may be just around the corner. Additionally, hopes of more US stimulus have risen after the Senate and House passed a budget resolution on Friday, starting the process that would allow President Joe Biden's $1.9 trillion rescue package to be approved. It is not all good news, though, as drug maker AstraZeneca said over the weekend that its vaccine appeared to offer only limited protection against mild disease caused by the South African variant of the virus. South Africa has suspended the rollout of Astra's vaccine, while the company and Oxford University have said they will work on developing a booster shot by the autumn. Back in European corporate sector, Dialog Semiconductor stock soared 16% to an all-time high, dragging the technology sector higher after saying it had accepted a takeover bid from Renesas Electronics, valuing it at some 4.9 billion euros. In France, Veolia stock fell 1.2% after a court suspended the conglomerate's hostile bid for water services rival Suez, also down 0.9%, while the government insisted that takeover talks must proceed on a friendly basis. Rolls-Royce stock fell 2.1% after the engineering giant said it was considering a plan to shut some of its plants for 2 weeks in the summer in a bid to stem losses. Experian stock fell 1.9% after the credit reporting agency said it was investigating whether the personal data of millions of people in Brazil that was found to be illegally offered for sale online could be connected with its Brazilian business. Serasa. Oil prices firmed on Friday on growing hopes increased stimulus will hasten an economic revival coupled with supply curbs by primarily Saudi Arabia but also other members of the Organization of the Petroleum Exporting Countries and its allies including Russia. Crude traded 1.2% higher at $57.54 per barrel. Brent rose 0.9% to $60.12 per barrel. Gold futures fell 0.2% to $1,809.75 per ounce. On the FX front, GBP/USD retreated around 30 to 35 pips during the early European session and dropped to the 137 neighborhood in the last hour. The pair failed to capitalize on its early uptick to 1 week tops. Instead, met with some supply near the 137.40 region and for now seems to have stalled its post-BOE rally from 2.5 week lows. It is worth recalling that the GBP/USD pair witnessed some aggressive short covering move from the 135.65 region after the UK Central Bank pushed back expectations for negative interest rates. Bulls, however, struggled to capitalize on the move, and the GBP/USD pair remained below the 137.55 to 137.60 congestion zone or multi-year tops. As investors looked past Friday's rather unimpressive US NFP report, the ongoing upsurge in the US Treasury bond yields helped revive the US dollar demand. This in turn was seen as a key factor that kept a lid on any further gains for the major. investors have been pricing the prospects for a massive US fiscal stimulus to support the economy. Apart from this, progress in coronavirus vaccination fueled hopes for a strong economic recovery and continued pushing the US Treasury bond yields. In fact, the yield on the benchmark 10-year US bond rose to the highest level in nearly 1 year and underpinned the greenback demand. The GBP-USD pair has now eroded a part of the previous day's positive move, and some follow-through weakness below the 137 round figure mark might prompt some aggressive technical selling. Euro-dollar appears to have met some resistance in the 120.50 to 120.60 band amidst a narrow trading range at the beginning of the week. The resumption of the upside bias in the greenback puts Euro-dollar under extra downside pressure. The persistent ascent in US yields continues to lend legs to the rally in the greenback and motivates the Euro-dollar index to regain some upside traction, always beyond the 91 mark, currently trading at 91.075. This is today's market news. Thanks for listening. We'll see you next time.